Hi there, Adobe is up over 70% since my last analysis, where I said that the market cap can go to 240 billion. And that happened. Now the question is still Adobe a good buy at the current price? They beat the estimates, the market expects a lot of growth ahead, and their products are the best on the market. So Adobe is a great business, we all like their products, but the question is if Adobe can be a good investment. Because there is a difference between a great business and a good investment. For instance, if you buy when the stock price is high, even though you invest in a great business, you can still be down over 20%. So that's why you have to focus on the risk first and buy when you have a margin of safety. And you can make over 70% in less than a year. And in this video, you'll find out the outlook of this business, what the market expects, and at the end, you'll find out the fair value of Adobe, whether it's a good buy at the current price or not. So let's begin. In this image, you can see analyst estimates. Revenue is expected to increase from 17 billion to almost 30 billion by 2027. Same for the earnings and cash flow. Earnings are expected to increase from 4 billion to almost 9 billion and cash flow from 7.8 billion to 10 billion. So the numbers look great. The market expects a lot of growth ahead. Now, let's see more. For the last quarter, they said that they have strong demand across Creative Cloud, Document Cloud, and Experience Cloud, and they lead the new era of generative AI. As they beat the estimates, they are increasing their annual targets, plus they see a massive opportunity over 200 billion. Revenue was about 5 billion for the second quarter, which represents 10% increase year over year, and they made 1.3 billion in earnings. Moreover, they also did some buybacks. And their guidance for the next quarter, they expect around 5 billion revenue, and for the entire year, the revenue to be around 19 billion. So their numbers look great and they expect growth ahead. That's why the stock price went up so much. You can also see that most of their money comes from subscription services. They made around 4.5 billion for the last 3 months. Plus, they're still making some money from products and services. I think you already know their products, what they offer, such as Photoshop, Premiere Pro, Illustrator, Adobe Express, the well-known Acrobat Reader, and they offer all their apps in one bundle, which costs around $55 a month. Of course, this is for individuals. For businesses, they have higher prices. For students and schools, they have lower prices. If you are interested in their products, you can go on their website and see more. So most of their money comes from subscription services. As we are in a digital economy, more businesses will need those products, especially content creators. For video and photo editings, these are the best products on the market. We can also see that they expect the total addressable market for Creative Cloud to be around 63 billion in 2024, and for Document Cloud, around 42 billion by 2024. Another good sign is that they've done some buybacks. The number of shares has decreased from 487 million to 458 million. If they continue this way, the stock price will go up even more. Your value will increase over time. Now, let's see the valuation based on analyst estimates. First, the risk. If Adobe makes about 10 billion in cash flow, and then the growth stops, is flat, then the market cap can go to 112 billion. And now the market cap is about 222 billion. So at the current price, you can still lose 50% if bad things happen. I mean, the growth rate slows or they face other problems. So you have to be aware of this risk. Now, the great scenario, if Adobe keeps growing its business, improves its cash flow, and they have higher growth rate ahead, then the fair value may be around 225 billion. Compare that to the market cap, the stock price seems fairly valued for a 10% annual return. So if you believe that Adobe will grow more in the future, more than 10% a year, then the stock price is fairly valued for a 10% annual return. In the normal case, where Adobe may grow a little, not that much, as the market is expecting now, but if they improve their numbers, the fair value may be around 150 billion for a 10% annual return. So if you compare that to the current market cap, the stock price is overvalued. That's why when you invest, you also need a margin of safety, because anything can happen. The earnings may decline, the cash flow might decrease, and the fair value may not be 220 billion, but less, 150 billion. Or if other bad things happen, then the market cap can go down a lot, to 112 billion. So when I made my last video, I said that the market cap can go to 240 billion. And that already happened. But now, your risk is higher. You can have another decline of 50% or a small increase. That's why you have to be aware when you buy the stock. Because if you invest at the highest peak, your return won't be that great. It might take more than 5 years to rebound. That's why if you buy low, your chances of making money are much higher and you can make a lot of money. So focus on the risk and always invest with a margin of safety. And if you have any question or if you want me to analyze something new, please let me know in the comments.